Too often business owners today are focusing on the little things in business. They're ordering supplies, dealing with employees, and dealing with customers, when what we should be focusing on is the most important thing, cash flow. I've grown over 10 businesses from the ground up. In this podcast, you'll learn the ins and outs of building a business and how to build transferable value. And most importantly, you'll learn how to maximize cash. They call me Cashflow Mike, and this is the clear path to cash. Hey, it's Cashflow Mike, and welcome to the Clear Path to Cash podcast. And I'm super excited today because you may have heard me close every show for the past several months with "Don't be a dumb business owner." But sometimes I don't tell you what that means. So if you're a longtime listener already, you might know what dumb is to me. But I don't want you to think that it's unintelligent. I'm not calling people unintelligent. I'm not saying that they're not smart enough. I'm saying that they're dumb, as in D period, U period, M period, B period. And what that means is you don't understand my business, right? If you're saying that to yourself, I don't understand my business, then you're a dumb business owner, right? But that's perfect because that's exactly why I'm here, right? If you happen to look at yourself and say that, well, then that's normal. Don't worry about it, right? Because most of us were or are dumb at some point in our business careers. And the great thing is that you don't have to be, right? All you got to do is just learn a few simple concepts, and we change the way that we think. And when you do that, it opens up a whole new world to you and your business. So here's the reason why I put this together. I'm currently writing a book called The Clear Path to Cash, right? And it's 8 steps on maximizing cash in just about any given business situation, right? It's just 8 lessons. It's a video course and a book. But because I had this thought about what a dumb business owner was, I wanted to give you some origin story, right? How did this come about? Well, for the past 7 years, I've been doing business owner and banking and accounting seminars all across the country. And there's always kind of a list of questions, right? And I started keeping a list a few years back. And when I got multiples, I just kind of put check marks by them. I'm like, oh, I kind of find it kind of fits in the same range or the same theme. So what I did was built a list of top 10, right? I didn't rank order them. Maybe you can throughout the show. You can kind of rank order them for me, kind of tell me what's more important than one or the other. But here's 10 things that people say to me during my business seminars that really just point to them as they're dumb, right? They are the dumb business owner. So I put together this list for my seminars, and it's a list of the most common rejections. Now I'm calling them rejections because they're rejecting the actual concept. They're rejecting what we know to be right in a successfully run business. They're rejecting it, just with their thought, and they don't even realize it. And the best thing about this is that just because it's their thought, it's the easiest to change. You don't have to do anything. You just have to open up your mind to something different. So, but when I hear it, I instantly think that they've given up. And I don't want you to feel like that. I don't want you to give up on your business. I don't want you to feel like there's no hope. I don't want you to feel like you can't do anything more than what you're doing right now. So I put together this list, and if this is you, it's okay, because we're going to work through these together in the next 15, 20 minutes. So let me remind you, if you haven't listened to us before, any of the show notes I do put on cashflowmike.com. You can also see me on YouTube. I do have a YouTube channel if you want to take a look at what I look like and what it looks like when I do this podcast. YouTube, just go to Cashflow Mike's channel. Make sure you subscribe and, get notified, right? Subscribe so you can get notified on when new episodes come out, which is about once a week. And then, of course, you can hear me on iTunes and Spotify and, believe it or not, Stitcher, right? So for those of you that listen to me on Stitcher, I really appreciate that, because I didn't know, right? I didn't know about Stitcher, but I've gotten a pretty good following from Stitcher. So let me get into this list, right? Because it's pretty important to go through this. So here's the list. Here's the first one. What I'm going to do is I'm going to make the statement, and then I'm going to kind of explain it just a little bit, and what you should be doing about it. So here's the first one. It doesn't matter what it says on my plan. I know how to run my business. I mean, and here's what they're really saying, right? When they say it doesn't matter, what's in their plan, they know how to run their business. Here's what they're really telling me is that, hey, I do have a plan. I made a plan. And first of all, I applaud you for that, right? If you're the type of person who's put the plan together, then that's the first step. You're at least thinking about it. And there's numerous ways to document a plan, right? You got business plans, you got marketing plans, you got budgets and forecasts. These are all examples of plans. but they're thinking that the plan doesn't match up with the reality, right, of what they live in. And that's so naive. It's so naive to think that your plan doesn't match your reality because, well, after all, didn't you write it based on what you knew, right? So that's your reality. I mean, you're already living in it. You're already making a plan based on what you know. You're making assumptions based on what you think is going to happen. So it's already a plan. Here's a good practice. If you're making a plan, a good practice is just to put it in writing and then refer back to it on a regular basis, right? Don't just throw it in a drawer or throw it in a binder and never look at it again. Go back to it because you were thinking that way. What you need to do is adjust your plan back to whatever is real now. So that's number one. The dumb business owner, and again, not dumb as in unintelligent, but it's dumb as in I don't understand my business. So here's number two. Number two is it's all my money, so who cares what I do with it? You may have even said that. It doesn't matter, all my money, it's mine anyway. It's my business, and I can do with what I want to. That's true. It's your money, but blurring the lines between your business and your personal purchases is a terrible idea, right? It's not only going to rob your business of cash that it's going to need to operate, but you're also going to devalue your company as well. So if you're thinking about selling this thing in the future, you're going to have to explain to somebody what all these extra weird purchases are. Like, why does a restaurant in St. Louis need season tickets to the Las Vegas Raiders? That's going to be a hard one to explain. What you've got to do, though, is be able to just separate those out, right? The best bet is to just play it by the book, and take an appropriate amount of salaries or draws, and leave enough money in the business to keep it running smoothly, right? That's what you've got to do. So figure out what that level is. How much are you going to take out? How much are you going to leave in? And play it that way. Keep your personal in a separate account from your business. And then, yes, it does matter because it is all your money. You need to keep your business running smoothly, and you need to keep your personal household running smoothly. I get it. Okay. Another thing a dumb business owner might say is, hey, you just got to be lucky in order to grow quickly. Well, that's totally false. I mean, it's just absolutely false. Although you might, it might help out a little bit. You might get just a little lucky. I mean, but luck comes from having a great offering for your customers, right? That's really what it was. Your luck is going to come from having a great offering because growth is a planned event, and you cannot grow without a plan. And this includes having a sales plan and an operational plan to handle that growth, and then a financing plan to make sure you have enough money to keep up with your operation. So growing takes discipline and work. And if you do that, if you have discipline, you follow your plan and you work at it, well, then you might get lucky. That's kind of how I look at it. So number four is something that a dumb business owner would say is that as long as I have money in the bank, I'm not out of business. I'm still in it, baby. That's simple and straightforward, but not accurate. Just having a few bucks in the bank doesn't mean you're in the clear. In fact, you might find out that you have more outstanding bills that's going to zap up all the cash in just a day. Here is where you need to know your days to bankruptcy number, right? And I call it days to bankruptcy number, for those professional financiers and CPAs and accountants and bankers out there, it's days cash on hand, and it's really going to tell you how long your company can survive at its current expense rate, and that assumes, of course, that sales have slowed down or they've stopped. This number is going to tell you when you might expect to go out of business, so here's my guidance to you. Try to have at least 45 days cash on hand at a minimum. But, I tell people to target a 3 to 6 months operating expense. If you're spending $10,000 a month, try to have, $30,000 to $60,000 in your business. So that way, if something happens, you got seasonality or, there's a threat to your business in one way or another, you have enough money to make it, at least the next quarter. All right. Here's number 5. We're halfway through the list. And number 5 is I can't afford to hire a bookkeeper or accountant. Well, then you better be one yourself. That's basically what I'm telling you. You better be one yourself because the compliance side of things alone is worth the cost. Do you want to be the one that has to file the sales tax returns and, do your withholding returns or income tax returns? Let me answer for you. The answer is no, right? If you're running a business, you need to worry about their customers and their satisfaction, right? Not filling out government required forms. If you're lucky enough to have a bookkeeper and accountant that also provides advisory services, boom, those are the folks that are going to find hidden cash opportunities in your business. And if they're finding hidden cash, chances are they're going to find way more than you pay them. So get a professional. Don't be afraid in this category to spend some money, but find the ones that can not only keep you out of trouble and make sure you're filing everything correctly, but they're also telling you what to do next, right? Telling you what decisions to make to keep that important cash flow coming in and keeping it in your pocket. So that's number 5. And hey, let's take it, I just want to take a little break to remind people that if you like what's happening here, you can get the show notes on cashflowmike.com. Also, you can check me out on YouTube. Cashflow Mike is the channel. And then, of course, Google, Spotify, Stitcher, of course, tune in. I mean, we're on all the major directories as far as podcasts go. So just check me out there. So let's complete the list up here. I've got 6 through 10 coming up, and these are things that dumb business owners say, right? They're just things that dumb business owners say. And believe me, nobody's been dumber than I am. I came about these. I mean, I probably said all of these at one point in time or another. So here's number 6. If you can't sell inventory if you don't have it. And guess what? You can never have too much, right? I've heard that during the class. You can't get it on the top line if you don't, or the bottom line if you don't have it on the top line. Well, that's saying if I don't have enough inventory, I can't sell it. Well, they're half right? Because there is a perfect amount of inventory to have. You can underinvest and miss out on sales, right? Not have it on the shelves. You've probably been into a store. You're like, oh man, this thing looks robbed. It looks half empty. It looks barren. I went into the Gap a month ago, and it was just like they were closing down or going out of business because they are not keeping inventory on the shelf. So, those are things that point to they're underinvesting in inventory, trying to save cash flow. But more often than not, we don't underinvest in inventory. We tend to overinvest, right? We're the ones that let the vendor or the salesman come in and say, hey, listen, I got this great deal. We've got a warehouse full of XYZ product, and I'll give it to you for, 50 cents on the dollar. It sounds great. You're going to probably save money on it. But guess what? You got to get rid of it, right? It's cash out of your pocket. You're taking cash out of your pocket today and giving it to the vendor. And if they could sell it at full price, they would. So why are you going to put it in your warehouse where you're going to have dead money sitting on their shelf? Wait until you need it. Always keep a base level inventory amount or a par level inventory amount. Don't overbuy. It's just money that's going, out the window. And how do you know that? What's the right number to buy? Use the on-hand formula, right? The items on-hand formula is going to help you determine the right amount per SKU, per item, per service, whatever it's going to be. And don't get lured into those, once in a lifetime inventory purchases because it's going to hurt your cash flow. Okay, number 7. Number 7 is I'm sure that most people have looked at their financial statements and tax returns and said this exact same thing. And what a dumb business owner might say is, hey, I'm making money. Why don't I have any? I could see it. I could see it on my income statement. I could see it on my tax return, but how come I don't have it in the bank account? Well, chances are you did make money on paper, right? But it didn't hit that bank account. And that's the big difference between profit and cash, because, one of those is going to make you feel good, but it's going to cost you money in the form of income tax. The other one is going to make you feel awesome and you get to buy stuff with it, right? So, of course, you want the one you can buy stuff with, and that's cash. You've got to know the timing between profit being reported on your financial statements and then cash being deposited into your bank account, right? So know the difference between those two. That's number 7 is I made money when I don't have any. Okay, number 8. Number 8 is, oh, man, I know they owe me on that invoice, but they're good for it. I've known them for years, right? So this is saying that they're not very aggressive on collection because they know a person is good for it. Well, I can tell you this, that most of the money that I couldn't collect over the years came from people I knew. Came from people I knew. Just because they've done a lot, we've done a lot of business together, and just because I know you doesn't mean that you're going to pay your bill, right? I mean, I don't know what's happening on your side of the fence where you might be having a cash flow issue yourself, so trust me, even if it's your best friend, they can beat you out of an invoice, if you let them. So here's kind of a rule of thumb. If you're sitting at 6 months and you haven't collected from this person, chances are you're not going to get paid. it's time to write off that invoice, especially if you've already reported that sale as income and reported it on your tax return. You've already paid tax on it. Go ahead and write it off and get that expense, get something out of the transaction. Don't sit there and hold on to it thinking that somebody's going to pay you down the road. Chances are they're not. Okay. How about number 9? We're almost done. Number 9 is it goes back to all the experience I've had with bankers. And here has been, my experience with business owners talking about their banker. And they say, hey, that bank, they don't want to loan any businesses any money. They just don't want to loan any money out. Well, after 7 years of training bankers on how to work with small business owners, I can say this is just wrong. In fact, the only way that they can make money is to loan it out, right? I mean, that's the problem that most business owners, have, is that they do one of two things. First of all, when you go to apply, usually it's too late. You're already in so much trouble that no bank can lend to you anyway, right? They have risk thresholds that you have to meet. So if you're already in too much trouble, there's no way that they're going to loan you money. And then secondly, you don't know what the bank's looking at. So you go in there and ask for something ridiculous or crazy or just pie in the sky. You don't know what the metrics are looking at or how much to ask for. And believe it or not, there's formulas for all that, right? So, I mean, they've got formulas and metrics that they assess your business by just to see if you're lendable. And there's formulas to determine how much you can afford in short-term or long-term financing. So my advice to you is get to know your banker. He has all the answers to the test. Let him tell you the answers to the test, because they can point you in the right directions to always getting a yes from the bank. Don't think that you know what you're doing on your own. Get some help here or learn those formulas yourself. So they want to give you money because that's the only way they make money. You got to know that. All right, number 10. And number 10 always makes me chuckle. And this is the one I'm like going, oh, this guy absolutely doesn't understand his business, right? And here's the statement that a dumb business owner will make. They'll say, oh, you just don't understand my business. My business is unique. There aren't any other businesses out there that do what we do. And I usually get this, when I'm talking about comparing your business to the industry average, and let me tell you, you might do things just a little bit differently. But if there's no other businesses out there like yours, then probably we don't need it. The market's not asking for it. The market probably doesn't need it. But I'm here to guarantee, and I'm here to bet that you at least fall into one of the 5 company types. You're either retail, wholesale, service, contracting, or manufacturing. You're one of those. So even at the highest level of industry, you're going to be able to compare to somebody, and if so, if you're one of those 5, which I bet you are, well, then you're only sort of unique, just like the rest of us. So, but just remember, you got to find something to compare it to. A ratio doesn't mean anything unless you can compare it to something else. So that's my 10 things that dumb business owners think. And I hope you enjoyed that, because that's actually the premise on why I built the Clear Path to Cash. It's been my experience with working with thousands of business owners over the last 25 years that led me to create that program, and the whole program is there to change the mind of the dumb business owner. And believe it or not, the first one I had to convince was me, right? DUMB, don't understand my business. It's a curable condition that can destroy your company if you don't treat it. If you leave it untreated, it will destroy your company. So do yourself and do your business a favor and become a star, right? Oh, another acronym, right? I haven't introduced that one in the podcast yet, but a star is STAR. It's stop thinking about rejection, right? Just stop thinking about it and put yourself on the clear path to cash. You can change your situation. It's just going to start by opening your mind. So, hey, I am Cashflow Mike, and I appreciate you listening to the Clear Path to Cash. You can check us out on cashflowmike.com. You can also subscribe to me on YouTube. You can subscribe to Apple, Google, Spotify, TuneIn, Stitcher, all of the major podcasts. And remember, don't be a dumb business owner.